make it, if you want to simplify, then you got to remember, guys, like if you want to simplify your trading, really simplify what it is that the strategy is. When you really think about what the strategy is, what are you trying to do essentially? In an ideal scenario, all you're trying to do is trying to trade where price action creates a high of the day, or trade where price action creates a low of the day. That's all you're doing. That's honestly all that you're doing. Every day, price action makes a high and a low. The amount of percentage of time that it happens in the London session and the US session is well over 90% of the time. That's why we have the boxes, or that's why we have those time frames. Because that's where we're looking for the high and the low of the day to occur. So just remember that. If you go into a trade setup, remember that the objective, right? If price action is going to create a high and then create a low, right? If it's going to do this, then what has to happen first? You have to have movement of price action. Let's say to create the high of the day, you have to have sideways consolidation, and then you have to have a stop hunt happen, right? That takes out the initial highs that were set during Asian session. As soon as those highs are taken out, that's the stop hunt. As long as you're going in your directional bias, you know what I mean? That's the stop hunt that you're looking for. And let's say if this is the New York session, you're looking for either a continuation or reversals, depending on where price action is at the beginning of the session. But ultimately, I mean, if you keep it in perspective of just that, I think it creates a very simplistic, way of looking at it. So like, I think a lot of people just want to overcomplicate it. Don't overcomplicate it. Keep it as simple as possible. An example of a plan is just basically telling yourself the rules that you're going to follow is all a plan is. So you could have a plan that says, I need a directional bias. Let's say you're trading type ones only because that's your favorite pair to trade, or your favorite pattern to trade. So I'm looking for type ones. I need a stop hunt to happen that goes above or below the Asian range. And then I'm looking for the pattern, the M or the W pattern. Does it have 5 or more candles in between the first and second leg? And then you're looking for what? Second leg, either railroad tracks, star pattern, cord of wood, right? On the second leg. If you don't have this, then you're looking for a close below the 13 EMA, right? Then you're looking for a pullback after that to get a better entry. Can you get a good risk to reward with that, in place? Can you get a 2-to-1? That's literally a quick plan here. You can add more to it if you want to. You can be like, all right, well, I need the TDI to be at this place. I need to see divergence. I mean, you can add as many things as you want to it that make you feel the most comfortable when taking the trade setups. The more strict, right, that you are with the plan that you have in place, the less trades you're going to have. But they should be more quality trades because you have all of these parameters first that must be met. So whatever plan you create is, will depend on how many trades you take. What are you willing to accept? What are you willing to not accept? Are you willing to accept setups that don't require a confirmation from a TDI? Are you not willing to, to take trades that don't have, confirmations of, like, let's say, price action pinning to it? Let's say if you're trading like a type 3 or something, and is your plan going to require you that price action comes exactly to the middle and pin the 50, or does it not? All of this stuff for your plan literally comes directly from back testing. Jack, did you send it to me in email? I assume. I take it you sent it to me like I think a day or so ago, right? Was that you? I assume. Okay, yeah, yeah, I got it. You don't have to resend it. So just try to keep everything as simple as possible. Don't overcomplicate it. If you guys are working like, I don't know, if you guys are working in US session, then you got to figure something out to figure out, okay, how am I going to trade the London session? Or you got to do something if you want to trade, obviously, because there's no way that you should be trying to work and trade at the same time. That doesn't make sense. And just remember that when you're first starting out, like, you don't need to actively be looking at the charts. Let's say if you work in the US session, and your trading opportunity is going to come, let's say, during a London session, because that's the only time that you can actually trade. At the very beginning, you don't need to be up for the London session. What you need to do first is do the back testing, do the planning, do the test of the plan first. You can do all of that without being up at London. You don't have to be up for London for that. The only time when you would need to be up for London is when you're ready to either, when you're about to forward test the plan on, live markets, demo trade, obviously, on the live market, or live trade on the live market. That's it. But you don't need to be up for London session when you're just back testing and all that stuff, creating the plan or any of that stuff. You don't need to be up for London for that. You can do that after work. So don't stress yourself out at the very beginning, because you don't even need to be up, for those sessions yet, until you start ready to do it. Don't try to don't try to rush the process. If you try to rush the process too hard, you're going to make it actually harder for yourself. It's a marathon, not a sprint. Any other questions?